Hey everyone, if you are even remotely thinking about buying a new car in the next couple of years, you're going to want to stick around. There's a brand new, massive tax deduction that just dropped, and it could literally save you thousands of dollars. So what's the deal with it? How does it work? And most importantly, how do you get it? Well, let's break it all down.
So let me ask you this directly. Are you planning to buy a brand new car sometime between now and the end of 2028? If the answer is yes, or even maybe, then paying super close attention for the next few minutes, well, it could put a serious amount of cash right back in your pocket.
Okay, here is the magic number. You ready? $10,000. That's right, up to $10,000. That's the maximum amount of car loan interest you can now deduct from your taxes each and every year. And just to put that in perspective, this is a huge new benefit. We really haven't seen anything like this for personal car loans before. Now, it is temporary, but man, is it powerful.
So you might be wondering, why is this happening? What's the point? Well, according to lawmakers, the goal is basically twofold. First, it's a really big push to get people to buy cars that are assembled right here in the US, to support American manufacturing jobs. And second, it's meant to be a little bit of direct financial relief for families who are feeling that squeeze from crazy high car prices and interest rates.
Before we get deeper into how federal tax brackets affect your refund or liability this year, let's talk about something every business owner dreads but cannot ignore: properly filing your tax forms. If you're running 1099 contractors, issuing W-2s, or handling payroll forms, one tiny mistake, one incorrect TIN, one missed deadline can cost you penalties, headaches, and hours of buried paperwork. That's exactly why you don't want to be fumbling around with outdated tax software or manual spreadsheets when it's time to e-file. You need an IRS-authorized filing platform that's fast, accurate, and compliant with all federal and state requirements. That's where Tax 1099 comes in. Tax 1099 is an award-winning IRS-authorized e-file platform that lets you quickly submit all your 1099s, W-2s, 94BEX forms, ACA forms, and more without the tax season stress. The guided workflow helps you create, validate, and submit forms in minutes, and its AI-assisted checks flag issues before you hit submit.
Prices start as low as just a few dollars per form, and it integrates with QuickBooks, Excel, Xero, and other accounting tools you already use. If you want to make this tax season as painless and error-free as possible, especially with these 2026 brackets and standard deduction changes, use the link in the description to get started with Tax 1099. It's the easiest way to file your IRS forms on time without the usual stress.
All right, so how do you actually get your hands on this deduction? It's pretty straightforward, really. We're going to break it down into a simple three-step process. And the very first step, the absolute starting point, is to figure out if you, personally, even qualify. Okay, let's run through your personal checklist. First up, the timing. The car has to be purchased within this very specific 4-year window, from January 1st, 2025, all the way to December 31st, 2028. Next, it's got to be for personal use only, so no business or commercial vehicles, and you have to be the very first owner. But honestly, the last point here is the real game changer. This is what's called an above-the-line deduction, and trust me, that is a huge deal. Why? Because it means you can claim this tax break even if you take the standard deduction, which, let's be real, is what most of us do.
Now here's a really crucial detail. This tax break isn't for everybody. It's targeted, which means your income definitely matters. We're talking about your modified adjusted gross income, or MAGI for short. Basically, that's your total income before certain deductions. If your MAGI goes above the limits you see on the screen, the amount you can deduct starts to shrink. So, for example, if you're a single filer, that phase-out process kicks in at $100,000. Okay, so what does that phase-out actually look like in the real world? Let's just walk through a quick example to make it super clear. Imagine you're filing as single and your income is $110,000. That puts you $10,000 over that $100K starting line, right? So the rule is for every $1,000 you're over, your deduction gets reduced by $200. So you take that extra 10 grand divided by 1,000, that gives you 10. Then you multiply 10 by $200 and you get a $2,000 reduction. So your maximum deduction drops from the full 10 grand down to 8,000. Make sense?
All right, step 1 is done. You've checked the boxes and you are personally eligible. Awesome. Now comes the fun part. Actually finding a car that qualifies. And you gotta know, the rules for the car itself are super specific. Okay, this is the single most important rule for the car. It all comes down to a little phrase, US Final Assembly. Now, this has nothing to do with where the car company's headquarters are or even where all the little parts came from. Nope. It's all about one thing. Where was the car physically bolted and welded together into its final form? And the good news is, by law, they have to tell you this right on the car. It's not some big secret.
And even better news, checking this is incredibly easy to do yourself. You've got 3 simple ways to check, and you can do it right there on the dealership lot before you even talk to a salesperson. First, just open the driver's side door and look for the info label on the door jamb. Second, take a peek at the VIN number. If it starts with a 1, a 4, or a 5, that's a great sign it was assembled in the US. And third, for 100% certainty, you can just pull out your phone, go to the National Highway Traffic Safety Administration's website, and plug the VIN into their online tool. Boom, confirmation.
Okay, so which cars actually qualify? Well, get ready because the list is massive. We're talking over 100 models, and it's still growing. We're just going to flash them up on the screen here, so feel free to hit pause if you want to look for a specific car you've got your eye on. We'll kick it off with brands like Acura, BMW, and a whole bunch of vehicles from GM. That's everything from Cadillac and Buick to Chevy and GMC. Moving on, you've got some absolute heavy hitters here, like the Ford F-150 and the Bronco. But what's really interesting is seeing brands you might not immediately think of as American-made, like Honda and Genesis, who actually build tons of their most popular cars right here in the US. And the list just keeps going. You've got Hyundai and Kia, who have a huge manufacturing presence down in the American South. And of course, you've got the iconic Jeep lineup, the Wrangler, the Grand Cherokee, all those guys. And hey, this isn't just for your everyday cars. We're seeing luxury brands get in on this too. You've got Lexus and Mercedes-Benz assembling some of their big SUVs here, and even newer EV companies like Lucid are on the list.
From Nissan's popular sedans and trucks to nearly the entire Subaru lineup, then you've got the awesome electric trucks from Rivian, and of course, the incredibly popular Ram 1500. It just goes to show, a huge chunk of the cars sold in America are also built in America.
And we'll round out the list with basically the entire Tesla lineup and a massive list of cars from Toyota. Now here is a super important reminder. This list can and will change as car companies shift their production around. So please always use those methods we just talked about. Check the door jamb, check the VIN to verify the specific car you are looking at before you sign any paperwork.
Okay, deep breath. You've confirmed you're eligible, you've found the perfect car that qualifies, and you've signed the papers and driven it home. So what's next? Well, let's get into the final and most important step, how to actually claim this thing on your tax return.
Now, before we get to the actual tax forms, there are just a couple of final little rules to keep in mind. First, this has to be a standard auto loan where the lender has the first lien on the car. That means, and this is important, leases are completely out. No leasing. Also, the vehicle's gross vehicle weight rating has to be under 14,000 pounds. But don't even worry about that one. It's just to rule out giant commercial trucks. It's going to cover pretty much every personal car, truck, and SUV you can think of. The good news is the actual filing process is designed to be pretty simple. Here's what you do. First, you're going to need to gather your documents, so your loan agreement and, most importantly, the end of your statement from your lender that shows exactly how much interest you paid. Then, the IRS has created a brand new form. It's called Schedule 1A. You'll just enter the interest you paid and the car's VIN number right on that form. And finally, you just submit that new schedule right along with your regular Form 1040 when you file your taxes. That's it. And one quick but really important heads up for anyone buying a car in 2025. Your lender has until January 31st of 2026 to get you that interest statement. Now, it might not come in the mail as a special tax form like you're used to. It might just be a number inside your online account or on your December statement. The bottom line is the responsibility is on you to find that number and make sure you report it correctly.
Okay, so we've covered all the how-tos. We know the rules, we know the cars, we know how to file. But now let's zoom out and ask the bigger questions. Is this new law actually a good thing? And more importantly, should it change how you think about buying a car? Let's take a look at the bigger picture here.
You know, when you weigh the pros and cons, you really start to see the full picture. On the one hand, the upside is obvious, right? It's direct tax savings in your pocket, and it supports American auto workers. But there are some big catches. Critics are quick to point out that this is only a temporary program, the income limits are pretty strict, and it's going to cost taxpayers an estimated $57 billion. And all of that leads to the really big philosophical question here. Does a tax break like this just encourage people to take on more debt than they probably should?
And that question brings us to a quote I really love from the financial expert Jim Dahl, who you might know as the white coat investor. He said, "This makes buying brand new cars on credit slightly less stupid." And, you know, he's got a point.
While this tax break is absolutely a nice bonus, it doesn't magically transform a potentially bad financial move, like taking out a huge loan on something that loses value every day, into a genius one. A tax deduction is great, but it should never be the only reason you decide to finance a brand new car.
So at the end of the day, it all comes back to you. Now you have all the info. You know the potential savings, you've seen the list of qualifying cars, and you understand the rules. So the big question is, will this powerful new tax break actually change how you approach your next car purchase? It's a pretty significant new tool to have in your financial toolkit, and now you know exactly how to use it.